It seems like every time I turn on the news lately, it's just like another wave of bad economic news.
Yeah.
We've got those tariffs from the Trump administration that are still shaking things up.
Right.
And then the stock market's been on this roller coaster ride with the S&P correction back in March.
Yeah.
And the Nasdaq seems like it's still trying to find its footing.
Mm-hmm.
And then you throw in like weakening consumer confidence and this inflation that just won't quit.
It's a lot.
It really makes you think, like, is there anything out there that's actually recession-proof?
It is the question of the moment for sure.
Yeah.
Yeah.
Is there a stock that can weather any storm?
When things get this unpredictable, investors really start looking for those companies that can not only survive, but actually do well when everyone else is struggling.
Right, exactly. Like, where can you put your money that's actually going to hold its value or maybe even grow when everything else is tanking?
Exactly.
And so that is what we are diving into today.
Okay.
We found this really fascinating article from the Motley Fool. It's just published April 1st, 2025.
Yeah.
Okay. And it takes a close look at AutoZone.
Okay.
The ticker symbol is AZO for those following along.
Got it.
And the article really digs into how this company has handled past economic crises and what its potential might be now.
In this new Trump tariff era, as they're calling it.
Yeah, exactly.
Exactly.
So what we're trying to do today is really understand why AutoZone has been so resilient in the past.
Yeah.
Like, we want to get beyond just the fact that they've done well and actually figure out why they've managed to not only survive, but often actually prosper during those tough economic times.
Right, because if we can isolate what those factors are,
Yeah.
then we can better assess if those same factors could make them a smart investment now, given all the uncertainty.
Exactly. So we're kind of using the past as a guide to see what might happen in the future.
Exactly.
So let's just start with AutoZone's track record.
Right.
This Motley Fool article points out that AutoZone has a history of not just surviving economic downturns, but potentially coming out even stronger on the other side.
Wow.
They made it through the dot-com bust,
Right.
the financial crisis of the late 2000s, and even that inflationary bear market we had in 2022.
Interesting.
And the article actually suggests that their business might actually do better when the overall economy is struggling,
Ah.
which is kind of counterintuitive.
Yeah, you wouldn't expect that.
No, you wouldn't.
So how does that work?
Well, the article includes these really helpful charts.
Okay.
And if you look back at how AutoZone's stock performed during the dot-com bust and the global financial crisis,
Yeah.
you can see that while the S&P 500 was having a rough time,
Struggling.
AutoZone's stock price was actually rebounding.
That's fascinating.
It is, and it's not just about those major once-in-a-decade kind of crises.
Okay.
Even in the last 5 years, which have been pretty volatile,
Yeah, for sure.
AutoZone continued to post gains.
Through all that.
Yeah, in 2021 and 2022, even to the broader market was facing headwinds, they were still doing well.
Uh-huh.
And yet this year to date up to March 28th, AutoZone is up 18%, while the S&P 500 is down over 4%.
That's a huge difference.
It's a massive divergence.
Yeah.
So what do you think about that kind of consistent outperformance?
Well, it's definitely not the typical behavior you see from a stock when the market's going down.
Right.
I mean, this really suggests that there are some fundamental factors that set AutoZone apart.
Right.
Almost like it's insulated from the broader economic trends and maybe even benefits when things slow down.
Yeah, it's like their business model has some kind of built-in protection against recessions.
Exactly. And that leads to the big question the article poses. What is their secret sauce?
Like, what is it about them that's different?
Mm-hmm.
Well, the article points to the countercyclical nature of the auto parts industry as a key factor.
Okay.
So basically, the idea is that when the economy weakens and people are feeling financially squeezed, one of the first things they'll delay is buying a brand new car.
Which makes sense. I mean, a new car is a massive expense.
Exactly. And in those times of economic uncertainty, families tend to hold on to their existing cars longer. And as those cars get older, they inevitably need more maintenance and repairs.
Yeah, your old car is going to break down eventually.
Exactly. So instead of committing to a new car payment, people focus on keeping their current car running.
So they're choosing to fix what they have rather than buy something new.
Right. And that's where aftermarket auto parts come in.
Ah, because they're a more budget-conscious solution.
Exactly. If your car breaks down, you got to fix it.
You need your car, especially for work and family.
Right. And buying those replacement parts is almost always going to be cheaper than buying a new car or even a used car.
That's a great point.
So it makes sense that the demand for those parts would actually go up during a recession.
Right, because people are holding on to their cars longer and those cars need more repairs.
Exactly.
And we can actually see this trend play out in AutoZone's sales data.
Okay.
The article highlights a few instances where their same-store sales actually accelerated during past economic downturns.
Oh, interesting. So they weren't just surviving, they were actually thriving.
Right, like take their fiscal year 2002, which ended right after the dot-com bust. Their comparable sales jumped to 9%, which was a big increase from the 4% growth they had the previous year.
Wow.
And then we saw a similar pattern after the financial crisis. Their comparable sales rose again in fiscal year 2010.
Huh. So this really wasn't a one-time thing.
Nope, it seems like a consistent trend.
Okay, so it wasn't just the major recessions either. The article also points out that their sales soared in 2021 and 2022.
Oh, yeah, that was a weird time economically.
Those were strange years.
Yeah.
With supply chain issues and those high used car prices.
And inflation was a big factor, too.
Absolutely. So, again, it seemed like people were choosing to repair their existing cars rather than buying replacements.
Yeah, because used cars were so expensive.
Exactly. So this all kind of points to this idea that the auto parts industry is somewhat insulated from economic downturns.
It really does. I mean, the data clearly supports that.
It does, but the article emphasizes that it's not just the industry dynamics that explain AutoZone's success. They actually make a point of saying that AutoZone's own performance as a company is crucial.
Right, so they're doing something right on top of being in a favorable industry.
Exactly. They're not just riding the wave, they're actually outperforming even within this resilient industry.
Interesting.
They even compare AutoZone's performance to some of its competitors.
Oh, okay, like who?
They mentioned O'Reilly Automotive, which has also done well, but they note that AutoZone's overall returns have been stronger than others in the sector, like Advance Auto Parts and Genuine Parts, which owns Napa.
So they're doing better than some of the other big names in auto parts.
Yeah, so why do you think that is what's setting AutoZone apart?
Well, it has to be something specific to their operations or their strategy.
Right, it's not just about being in the right industry.
Exactly.
So the article highlights a few things.
Because I'm curious.
One is AutoZone's massive store network.
Okay, yeah, they're everywhere.
They've really focused on establishing a widespread presence, so it's super convenient for both car owners who are doing their own repairs and for professional mechanics to get the parts they need quickly.
That makes a lot of sense. I mean, when your car's out of commission, you need those parts ASAP.
Exactly. No one wants to wait around for their car to be fixed.
Nope.
And that focus on professional mechanics seems to be a particularly smart move.
Yeah, how so?
Well, for those auto repair shops, having a reliable supplier with a ton of inventory and fast delivery can really impact their bottom line.
Right, because time is money for a mechanic.
Exactly. If their shop is down because they're waiting for parts, they're losing money.
Makes sense.
So AutoZone's ability to deliver those parts quickly gives them a real edge.
It's like they've streamlined the whole process.
They have. And beyond that, the article also mentions their management team's skill in allocating capital.
Okay, so they're making smart decisions with their money.
Yeah, particularly their aggressive stock buyback program, which has helped boost returns for their shareholders.
Interesting. So they're focused on rewarding their investors.
They are.
So it sounds like they're doing a lot of things right.
It seems like they're in the right industry historically,
Yeah.
and they're operating very effectively within that industry.
Okay, so now let's talk about the elephant in the room, the Trump tariffs.
Yeah.
I mean, those have the potential to shake things up.
They do. So President Trump recently announced a 25% tariff on foreign auto imports.
Right.
And the market reaction was actually really interesting.
Okay, how so?
Well, the stocks of domestic automakers like General Motors and Ford actually went down.
Which makes sense if their costs are going up.
Right, their production costs could increase.
Yeah.
But AutoZone's stock price actually went up.
Huh. So investors are thinking these tariffs could be good for AutoZone?
It seems like they're betting that AutoZone might actually benefit from this situation.
Wow.
And the article points to some statements made by AutoZone's CEO, Philip Daniele.
Okay, what did he say?
Well, on previous earnings calls, he indicated that the company plans to pass along any cost increases due to the tariffs to their customers.
So they're not going to absorb those extra costs themselves?
They're basically saying they'll adjust their prices accordingly.
Interesting. And do they think that'll affect their sales?
Well, that's the key point. They seem confident that they can do this without hurting their profit margins.
So they're not worried about losing customers?
It doesn't seem like it.
Well, why not?
Because, and this is where it all kind of ties together.
Okay.
Aftermarket auto parts are generally the most affordable option for car repairs.
Right. It's usually cheaper to go with aftermarket parts than OEM parts.
Exactly. So even if the prices of some imported parts go up because of the tariffs and AutoZone passes those costs on, it's probably still going to be cheaper than buying a new car or even going with those original equipment manufacturer parts.
Ah, so they have some pricing power because they're still the most cost-effective option.
Exactly. People still need to fix their cars, and AutoZone is likely to remain the preferred choice, even with a slight price increase.
It's like their competitive advantage gets even stronger in this kind of environment.
Right. The tariffs might actually make them more appealing to customers who are looking to save money.
That's fascinating.
It is. So this all plays into that narrative of AutoZone being a potential safe haven for investors during times of economic uncertainty.
Especially when that uncertainty is driven by things like trade policy changes.
Exactly.
Wow.
Now, the article also touches on AutoZone's current market valuation.
Okay.
They mentioned their price-to-earnings ratio is around 25.
Which is pretty good.
Yeah, they describe it as reasonably valued.
Okay.
They also highlight the company's continued expansion, pointing out that they've opened 241 new stores in the last year.
So they're still growing.
They are.
That's a good sign.
And as we mentioned earlier, their stock has already seen some really nice gains this year.
Right. Which suggests that investors are expecting them to continue to outperform.
Exactly. They're putting their money where their mouth is.
So taking all of this into account, the historical performance, the counter-cyclical nature of the industry, AutoZone's specific strengths, and even the potential benefits from those tariffs, the article concludes that AutoZone is a very strong contender for investors who are looking for a safe stock to ride out the trade war volatility.
It's a compelling argument. They've laid out a lot of evidence to support that conclusion.
It really is.
So to sum it all up from our deep dive today, AutoZone has shown an impressive ability to not just weather economic storms, but to actually do well during those downturns.
Yeah, they seem to have a knack for it.
And it seems like a big part of that is the nature of their business. When the economy slows down, people tend to repair their existing cars rather than buy new ones, and that benefits AutoZone.
Right, it creates a surge in demand for their products.
Exactly, and on top of that, AutoZone has these company-specific advantages, like their huge network of stores, their focus on professional mechanics, and a really strong management team.
They've built a solid foundation for success.
They have, and looking ahead, even these tariffs could potentially work in their favor.
It's like the perfect storm for them.
It kind of is. So as you, our listener, are navigating this current economic landscape and thinking about how to make your investment portfolio more resilient, AutoZone definitely presents a really interesting case study.
Yeah, it's worth considering.
But as always, we encourage you to do your own research and think critically about this.
Right, don't just take our word for it.
Exactly. So here's a final question for you to ponder.
Okay, I'm listening.
Given AutoZone's track record and everything we've discussed today, what are some potential long-term risks or unforeseen factors that could still impact their success?
So what could derail this seemingly recession-proof company?
Think beyond the immediate analysis, like what could disrupt this trajectory in the years to come?
That's a great question to think about.
It is. And that's all the time we have for today's deep dive.
Thanks for having me.
It was great having you.
Always a pleasure.
So until next time, happy investing, everyone.
See you later.